The AI is showing something really interesting about XRP right now, a 98.7% probability of a major move up, even while everyone's panicking. Let's break it down. Here's where we are right now. XRP is sitting at $1.1388, down about 0.58% in the last 24 hours. Now, I know that doesn't sound exciting, but you know what I've noticed? Sometimes the best opportunities come when things look a little boring on the surface. The market's been pretty choppy lately, but there's actually some fascinating stuff happening underneath that most people are missing. Here's why this number matters. The RSI is at 41, which puts us right in that sweet spot where things aren't oversold yet, but we're getting close. The MACD is actually showing something interesting. It's sitting above the signal line with a positive histogram of 0.0068. That's a momentum improvement signal. Now, here's the thing about the current price. We're sitting right between the Bollinger bands, trying to bounce off that lower support. The real test? We need to break above $1.1670, where both the 5-day and 20-day moving averages are waiting. So what moved the market most today? Well, those geopolitical tensions are still brewing in the Middle East, and the Fed's been pretty hawkish lately. But here's what's really interesting. XRP has an 85% correlation with Bitcoin right now, and Bitcoin's holding strong above $64,000. When the dollar gets stronger, XRP usually feels some pressure, and that's exactly what we're seeing. But sometimes, these macro headwinds create the best setup for a surprise move up. Now this is interesting. Ripple just submitted a comment letter to the FDIC about those Genius Act regulations. The XRP community is pretty excited about this because it shows Ripple's actively engaging with regulators. And get this, there's buzz about the Clarity Act possibly getting Senate approval, which could be huge for XRP. If this passes, here's what happens. We could see a major regulatory clarity boost that removes a lot of uncertainty. The mood right now is, well, pretty scared actually. The Fear and Greed Index is sitting at 23, which is extreme fear territory. You know what I've noticed over the years? When everyone's scared, that's often when the best opportunities show up. XRP search trends are low at 27, so people aren't really paying attention right now. But here's the kicker. There's about $3.9 million in short positions that could get liquidated if we break above $1.15. That could fuel a nice little squeeze. The big players are doing something interesting. We're seeing 593 whale transactions involving over 409 billion XRP. That's a lot of institutional money moving around. But here's what really caught my eye. XRPL just hit the #1 spot with $1.9 billion in real-world asset tokenization inflows over the past 90 days. This isn't just speculation anymore, this is real utility driving demand. In plain English, we're at this stage. Elliott Wave analysis shows we're in a C-wave correction, which is basically the final leg down before things potentially reverse. The Wyckoff analysis is even more interesting. We're in what they call Stage B, which is often where smart money quietly accumulates while everyone else is worried. It's like the calm before the storm, but in a good way. So what does the AI think? This is where it gets really exciting. The short-term prediction shows $1.29. That's about 13% up from here. But wait, the medium-term 7-day prediction is calling for $1.54, with a 98.7% probability. That would be a 35% move up. Now, the long-term prediction is more conservative at $1.31, which suggests we might see a nice pop and then some consolidation. But that medium-term signal, that 98.7% confidence level, is pretty remarkable. But here's what could go wrong. Those Middle East tensions could escalate and create a risk-off environment. The Fed could get even more hawkish. And technically, we're still trading below most of our major moving averages, so the trend is still down on the bigger picture. Also, XRP ETFs are seeing outflows right now, which shows some institutional money is stepping back. So we need to be careful and not get too carried away. Here's my take. I'm leaning toward gradual accumulation with about 70% confidence. The setup is pretty compelling with that AI signal and all the institutional real-world asset activity. For entry, I'd look at $1.13 to $1.14 as the primary zone, with a secondary entry around $1.08 to $1.10 if we dip further. Stop loss would be $1.05. If we break below that, the setup's probably wrong. First target is that $1.29 level from the AI, and if we get momentum, $1.54 is the bigger prize. The risk-reward here looks pretty attractive. That's it for today. The AI is giving us some pretty bullish signals despite all the fear out there. Remember, I'm just looking at the data here, not giving financial advice. If this analysis helped you see the bigger picture, hit that subscribe button and give it a like. See you next time.